Well, let's start where it pinches heavily. The Nigerian economy. Is the economic story beginning to shift into the start of a real recovery, or just a fragile moment of stability? From ambitious revenue targets to easing inflation, the numbers are turning cautiously optimistic. The government is projecting over 40 trillion naira in revenues for 2026, while growth is expected to approach 5%, buoyed by reforms, improved oil output, and a steadier macroeconomic environment. Inflation, once at a relentless pressure point, is beginning to ease. The naira, after months of volatility, is holding within a tighter band. And for the first time in a while, the central bank has moved to cut interest rates, signaling growing confidence that the worst may be behind. Even external buffers are strengthening, with foreign reserves now above $50 billion, offering a cushion against global shocks. But beneath the headlines, is this stability sustainable or artificially supported? Are ordinary Nigerians actually feeling this recovery, or still struggling under the weight of high prices and weak purchasing power? Well, to break it all down, who better to talk to than one of Nigeria's leading economic analysts, the investment banker and economist Adetilewa Adebajo, who's the CEO of the CFG Advisory. Thank you very much indeed for coming in.
Thank you. Good evening, and thank you for inviting me to your program.
It's actually nice to have you here.
First
because
time
most of the time I see you on the telly from Lagos.
Yes.
So it's nice to actually have you physically in Abuja.
Thank you,
Let's
Charles.
start with, and of course to have the benefit of your analysis, let's start with the big picture, your assessment of the reality of this recovery, because the macro indicators look better, growth ticking up, inflation easing, reserves rising. But is this a genuine recovery or just a temporary stabilization driven by policy interventions?
All of the above. And I think there's no doubt that the economy has reached a point of inflection. And we're beginning to see more than green shoots. But of course, reforms by themselves are not enough to be able to make things work. And in order for us to see the impact on the lives of Nigerians we've turned our economy into a sachet economy. And we have about 120 million Nigerians in multidimensional poverty. So the urgency of now is that we need to translate the gains of these reforms into sustainable and solid growth and productivity. That's the key issue. And for Nigerians to begin to feel the impact of these reforms, the economy has to grow between 8 to 10% on a sustainable basis. And the government has to put in those growth strategies in place to hit those numbers. 5% is good. It's larger than growth of population. But for a population of 200 million Nigerians, we need to see sustained growth at about 8 to 10%.
And are we anywhere near that yet? I mean, in terms of the forward-looking projections?
Not yet, because the World Bank projects a 4.4% GDP growth for Nigeria this year. At the CFG Advisory, we are projecting a plus 5% growth. And this on the strength of the mining sector. The containers are no longer leaving Nigeria empty. Nigeria is now the number 5 exporter of rare earths minerals in the world. That has to begin to reflect on our GDP. And if you take a look at the highest growing sector of the Nigerian economy in the last 2 years, it's been the mining sector, which is growing at about 25% easily. So
that's pretty impressive.
Yes.
Actually.
So we need to begin to translate these gains into productivity. And what we need to see from government is their growth policies. So now that you've achieved some of these reforms, you need to translate the gains of those reforms into productivity and grow the economy and impact Nigerians.
Right, I'm going to come to that because that's obviously critical in a minute. But it's interesting that though inflation, for example, is said to be slowing, prices are still high. I mean, is this disinflation meaningful for ordinary Nigerians or largely statistical?
It is, without a doubt. And I think if you take a look at prices and the trajectory of inflation over the last year, we've seen significant decrease in inflation. While official numbers are about 15%, we at the CFG Advisory, using our adaptive gap analysis, still puts inflation around about 18%. And you think that the sentiments of the Monetary Policy Committee, still they do not have the confidence to cut rates at that level because they are being more conservative and they want to be sure. But I think officially we should reach single-digit rates at this run rate of disinflation. Inflation by the end of this year should be close to about 10% or 12%. So at 12%, Nigeria in 2012 hit at 12% inflation. In 2012, 2013, Nigeria hit growths of between 8 to 10%. So that's a magic number for us. If we can get inflation down to 11, 12%, I think we can begin to see significant growth. But growth has to be deliberate. Government has to put in the stimulus to be able to grow the economy.
And of course, you mentioned the central bank cutting rates slightly. And you think this is the right time to ease, or is there a risk of reigniting inflation? And what does this signal about the central bank's confidence? I mean, you touched on that briefly. And should Nigerians share whatever nuggets of optimism there are?
Well, they should, because I think while the central bank is having a cautious approach, evidently the real sector cannot continue to borrow at 30%. It's not a growth enhancer where the rates are right now. The beneficiaries of the rates are the investors making good profits on that. But we need to strike a balance and then have an equilibrium whereby the rates will come down, whereby real sectors can borrow to be able to stimulate growth. So you still have that, and that's part of the policies of hitting that 8 to 10% growth rate. So the next MPC is in May, which was probably we're halfway through the year by then. So we need to see something significant this year so that we can begin to stimulate economic growth and activity in terms of rate cuts. But obviously, I think the central bank has been very cautious. They've mentioned election spending, and they're looking at certain the global situation, uncertainties. Oil prices, surprisingly, are doing quite well. So I think that's the challenge you have right now in terms of striking that balance and that timing. But again, we need to see some coordination. What I've not seen is the coordination between monetary policy, fiscal policy, trade policy, investment policy, and industrial policy.
Right.
A new industrial policy just came out, and we don't know where that is going for now.
And are those the specific, that coordination you're talking about, are those the specific sort of ways to translate these micro gains into actual relief at the market level?
Exactly, because I'll give you a practical example, for instance. We have 3 sugar refineries in Nigeria owned by Bua, Dangote, and flour mills. Now, these refineries are importing raw sugar into Nigeria. And over the last 10 years, there's been tariffs of, they've been like taxes on the imports of these things within the Sugar Council, and they're supposed to use this funds to be able to backward integrate. So we have 250 million or 220 million Nigerians. Why can't our Nigerian farmers be more productive, growing sugarcane to support these refineries who have the capacity to serve not only West Africa, but the African Continental Free Trade Area? So these are the sort of deliberate things you need to do. We have an LNG project. We cannot go to train 8 because of gas. We have an OK LNG project. We have a Bonny LNG project. We've only been able to do one LNG project. You need to get the investments to do these projects. you need to get all these key
and they need to run simultaneously. Right.
For you to grow the economy. And these are the limitations to the $1 trillion economy.
Indeed. And let's look at the Naira, which appears to be more stable. How much of that stability is market-driven, and how much is being propped up by intervention from the central bank?
Very good question. I was looking at this today and trying to understand exactly how those dynamics work. We do have a market-driven system, without a doubt, which has changed. And last year, we had $25 billion in foreign portfolio investment flows, most of this going into Omo bills. With this massive inflows into Nigeria, that means that the strong demand, we have diaspora refunds of close to $30 billion. And what this has done is the fact that the Central Bank of Nigeria is no longer the dominant player in the markets. From the statistics that I've seen from the Bloomberg terminals, I think the central bank's participation in the market is under 10%. As of end of last year, it was about 6%, but definitely under 10%. So the central bank participation in the market, even if you're being conservative, is maybe not more than 10%, or definitely under 10%. So the central bank is just another player in the market, and we've been able to diversify the sources of our foreign exchange. What is driving, in fact, as a matter of fact, I think the critique of the central bank is that they did an intervention last week of about $200 million. I don't know what it's for. And we should also not forget that the central bank also needs dollars and also needs Naira. They need to fund the FAC accounts. So when they need to do that, they'll sell their dollars and fund the FAC accounts to pay the states. And when they need dollars for the various governments' uses, they also need to go out there and buy dollars. So the central bank is just another player in the market, and their activities are less than 10%.
Right.
So I think the critique of the central bank was that they didn't let the Naira drop further down. You know, because if they hadn't done that intervention, probably the Naira would be trading at 1,002. But what is important is that we have a market-driven system, which is open, which is transparent, and everybody's trades are on bid and offer basis. So it's all there in the Bloomberg terminal. You can see all that.
Right. So it's your sense that this exchange rate level is sustainable, or we're sitting on another potential adjustment?
No, I think it's extremely sustainable,
right,
in the sense that the fundamentals are clear, in the sense that we have reserves at close to 50 billion, which is really not significant. But the key is the supply, which is important. The central bank is no longer the main supplier to the markets. So what we need to do is to ensure the portfolio investors, about 25 billion. We need to encourage more the diaspora remittances of about 30 billion, the exporters and the IOCs bringing in their money back for their operations in Nigeria. So what we need to do is to keep the market liberal so that all these other sources of foreign exchange remain and continue to come into the system and build that confidence. You know, so once you have that open market driven bid and offer system, then a lot of these things can work quite easily.
And the revenue service is targeting over 40 trillion naira in revenue for 2026. How realistic is that, given Nigeria's historical struggles with revenue mobilization?
Okay, I have like 3 charts that I did. And if you take a look at what the revenue service are doing, you've seen that from last year to this year, if we need to go back to one of those slides, they've gone up by about 44% from their collections. They're projecting to go up 44% this year from last year, from 23.8 to about 44%. So what does that mean? Does that mean that all the tax reforms was simply to increase our taxes? But having said that, I think if you take a look at the next slide, which you'll see, you take a look at the percentage change, and then you take a look at how most of this has worked in dollar terms. In 2022, we collected about $23 billion. But because of our devaluation, what we're collecting this year, what they're projecting to collect this year, is about $30 billion. But in real terms, you know, the collections have gone down over the last 4 or 5 years, if you look at it in dollars. But again, good targets. If they meet these targets, is going to be very important because we have significant fiscal challenges. There's a 25 trillion naira deficit that needs to be financed. and it is clear that the domestic capital markets cannot cope with this.
Right. So if these projections fall short, what are the risks? More borrowing, deeper deficits, tougher taxes?
Yes, because even with the increase in taxes, you cannot fund the deficit.
Right.
So this increase in tax, we should know, cannot cover the budget deficit. So this is really where the challenge is. So we need to restructure the budget. I made a presentation recently at the Senate Appropriations Committee hearing for the 2026 budget, and I think what was decided was that all these three budgets we have to be consolidated this year, and we need to be able to find a way to streamline this budget, because the deficit in this budget is going to pose significant fiscal challenges this year because our domestic capital markets cannot cope with that funding.
That's a very important point, and I'm glad you made it to them, and I hope they're listening. But let's return to the GDP. You talked about the projected 4.68 growth rate, which sounds strong, but as you said, we need to grow a lot faster than that, a lot bigger. And is it an inclusive growth? And which sectors are actually driving that growth? Are we seeing job creation? You talked about productivity, which we're clearly not seeing, or is this just top-line expansion without real impact?
Well, the key three areas driving growth this year is mining, as I've said, financial services and insurance, and trade. Those are the key three areas driving growth. Another key area that will drive growth this year is the oil and gas industry. That has recovered significantly from underinvestments. And so those four sectors of the economy are the ones that will drive real inclusive growth from what we're seeing, because you're going to see the banks have been recapitalized and there's a lot more activity going on in that sector. So, but in terms of our GDP, I think, like I've said, the optimal GDP for Nigeria is 8 to 10%. Until we reach 8 to 10%, we haven't got to the promised land. Right. So we're in a trajectory, or there's a roadmap to there, and that is really where we need to benchmark the performance of this government in terms of their performance.
Right. Yeah. And we keep hearing, I mean, excuse our spectacular ignorance, many of us are not economists and sort of, you know, economic investment bankers and all the rest of it who crunch these numbers and do the assessments every day. But we keep hearing about ongoing reforms. Which reforms are actually working and which ones are not delivering results? And what are the biggest structural risks that could derail this apparent progress?
Well, all the reforms have worked. Every single reform has worked. But now the question is, how do you derive the benefits? We've removed the subsidy. We're saving $15 billion a year. But unfortunately, we're running a 25 trillion naira deficit. The irony of this is the fact that the debt service burden is about 15.9 trillion naira. That debt service burden is larger than the defense, infrastructure, power, education, and health budgets combined at 15.2 trillion. That really is where the challenge is in Nigeria today. So while we might have benefited from the reforms, we have some significant fiscal challenges that we need to address. You know, and I think that it's important with the ongoing banking, the banking reforms and the recapitalization of banks. I think that's very important to understand exactly what's going on there, because all the banks in Nigeria are sound. So fundamentally, all the banks in Nigeria are sound. So what is happening now is the fact that with the banking reforms, we're asking banks to decide how they want to play. And we're saying that if you want to be a bank that you want to play abroad and you want to be in London and Kenya and all those places, then you need to have 500 billion. But if I decide that I want to be in a bank that is playing nationally in Nigeria, why do you need to burden me with capital of 500 billion? So I play at that space as a national bank, and I said, okay, fine, I want to be a regional bank, or I want to be a merchant bank, or I want to be a microfinance bank. So what is happening with the banking system now is that we're asking everybody to decide how you want to play, which is excellent. But we have fundamentally a sound banking system, because even though that some banks might have met their capital requirements, The others who don't make their capital requirements or decide on where their business model will be. So we have a strong foundation. So what I'm trying to say is the fact that we've built a solid foundation, but reforms alone cannot happen. If you want to get to a 1 trillion economy, I don't believe Nigeria is not a $1 trillion economy. The potential of this economy is a 3 trillion economy, but we do not have the economic leadership to get us there. So we need to engage in these structural reforms, and you need to now take all these gains from these reforms and translate them into growing your GDP 8 to 10% a year to impact and bring 120 Nigerians out of poverty.
Million Nigerians.
Yes, 120 million Nigerians out of poverty, because we don't have a middle class. Purchasing power, as you said, has been eroded, and we've become a sachet economy. So these are the challenges that this government needs to come up with now, with the policies for productivity and growth.
It's been well worth talking with you and getting your assessment of what is going on in the Nigerian economy. Thank you very much indeed for coming in. Adetilewa Adebajo is the CEO of the CFG Advisory, one of Nigeria's leading economic analysts and an investment banker, an economist of enormous repute. Thank you very much indeed.
Thank you. I look forward to coming on the next time.
I look forward to having you here again the next time. Thank you very much indeed. Good to see you.